Modern Wall Street is designed to look unapproachable. Between the flashing monitors, the algorithmic supercomputers, and the complex jargon, the system projects a clear message. The average person lacks the intelligence to play this game. This environment creates a trap for the everyday investor. Sitting out guarantees that inflation will slowly erode your savings, yet jumping in without a plan often leads to heavy losses driven by market manipulation or social media hype. René Pineda represents the ultimate anomaly to this system. An immigrant with an 8th grade education, Pineda spent years washing dishes and survived 2 separate workplace accidents that left him temporarily paralyzed. He lost his properties and his savings, twice. Starting from zero with no mentor or professional capital, Pineda spent his recovery in the public library. He taught himself the mechanics of finance one book at a time, eventually rebuilding his wealth and achieving total financial freedom. Pineda's success shows that wealth building is an open system. It rewards curiosity and persistence over elite degrees or professional pedigrees. Pineda's first rule is foundational. You must clear high-interest debt and establish a cash emergency fund before purchasing a single stock. This chart highlights why traditional saving fails over time. Inflation acts as a silent tax. If your bank account earns 1%, but inflation runs at 3%, the real-world value of your balance is actually shrinking. You are losing purchasing power every year. Pineda counters this math by using assets designed to outpace that rate. He utilizes inflation-linked bonds, which adjust their value as prices rise, and broad ETFs, which are diversified baskets of stocks that track the growth of entire sectors or markets. Skipping these defensive foundational steps shifts your strategy away from a calculated business and into a territory of extreme risk. In place of complex algorithms, Pineda uses a primary visual tool, identifying support and resistance levels on a stock's timeline. Support represents a psychological floor where buyers consistently step in to support the price. Resistance is the ceiling, where sellers consistently choose to take their profits. Pineda buys near the floor and sells near the ceiling, repeating the cycle as long as the pattern holds. He compares holding a stock to a steam train climbing a mountain. As long as buyers provide the momentum, the train climbs. The moment momentum fades and the asset begins to slide backward, you exit before the crash. This logic faced a real-world test during the market panic of March 2020. This chart captures the steep market drop. While many traders locked in losses at the bottom, disciplined outsiders who bought quality companies during the panic saw their portfolios fully recover by late 2021. When broad fear drives down the price of quality companies, the disciplined outsider finds their greatest buying opportunity. Even with the right mechanics, most people lose money because of a biological instinct, the primal urge to follow the herd. This instinct fuels every financial bubble. During the dot-com era, the herd poured money into any company with a website, regardless of whether the business actually turned a profit. Modern manipulation exploits this same psychology. Coordinated social media influencers hype assets they already own, while massive corporate frauds like the FTX collapse hide extreme risks behind a wall of public buzz. These emotional traps lock investors into a destructive cycle. Fear forces them to sell at the bottom, while overconfidence keeps them trapped in hyped assets that eventually fail. Ultimately, market risk originates in the mind. It stems from falling in love with a stock and losing emotional control. Pineda treats the stock market as a utility to buy back his freedom. For him, the market serves as a tool for peace and time, rather than a place to chase high scores. He protects his time by using automated advance orders. By setting his target prices in the system, he can live his life without constantly monitoring a screen. Morning tone. Without these boundaries, trading can trigger the same neurological highs as gambling. Left unchecked, the pursuit of more can consume your peace of mind and your relationships. You cannot control the market's chaos. However, by mastering your mindset, ignoring the crowd, and executing simple mechanics, you can build lasting wealth from zero.